Now that NVIDIA earnings are out of the way, is the AI trade about to take its next leg higher? Let's ask Tom Lee. He's Fundstrat's head of research. Welcome back. So how do you assess this now? We've cleared the way, right? All the AI stuff's now out of the way. We're looking at yields. We're looking at oil. We're looking at the Middle East. But how do you feel about this market when you just heard Chris Harvey at the top of our show saying we're going to have an everything rally that's going to take us past 8,000 by the end of the year?
Yeah, Scott, I think the market is pretty healthy. It showed resilience in the face of higher oil, higher yields. But I also think the U.S. is pretty unique because we do have a structural driver for the economy, which is not only is the U.S. the producer of AI, but we are also relatively energy independent, and that's been exposed by this war. And the consumer's in pretty good shape. So, I mean, I think there is a pretty good runway. So I'd agree with the idea that stocks, compared to the start of this year, have more upside into year end. We've got a few things we have to work through as we get later through the year, but I think for now the fundamentals are healthy, and that's supported by earnings.
I don't know what shape the consumer's in, to be honest with you. I mean, I understand the K-shaped economy, obviously. Top of the K is better than the bottom of the K in terms of the durability to keep spending. But you listen to Walmart, which was pretty cautious, and you're like, what is the real state of the consumer? And if oil prices remain elevated for too long, is that the thing that wrecks the story?
Scott, yeah, it is, in a way it is K-shaped, because if I had to say, okay, what are the things that are sort of ballast and things moving the consumer, of course we know that it's higher gasoline, higher food, and of course there's going to be a shortage of some petroleum products. But on the other end of that spectrum is, the wealth that's going to be created by the IPO of SpaceX, OpenAI, et cetera. I mean, that's several $1 trillion worth. And as we know, there's like a marginal propensity to consume from the wealth effect. So I think the consumer is getting a tailwind later this year, but a lot of it is for those who own equity.
I mean, a tailwind from owning the IPOs?
Well, it's actually the private investors. As we know, SpaceX was probably seated at $50 million. It probably raised tens of billions over the last decade. But now it's going to have a net worth valuation of around 1.7 trillion. So that's actually now going to be monetized for the LPs of the funds that invested in SpaceX. So they're, several $1 trillion is quite a lot of stimulus to the economy.
Wow. Okay. Hampton's real estate market. Watch out. AI trade. How do you feel about it after NVIDIA?
I mean, a company with the size of revenues, NVIDIA, growing at 8%, I think shows that there is still, unrelenting demand for the product NVIDIA sells. And then we know that those who are starting to use AI are actually noticing a gain of function on productivity. Ken Griffin really stated it well when he says he could see it's replacing a lot of analysts. So to me, I think not only are the users of AI benefiting, but there's still a shortage of those who are supplying the equipment.
But aren't you still calling for a pullback in stocks and something meaningful? Like the one we had already didn't really qualify, if you will, under what you were thinking could happen, right?
That's right, Scott. I think we had like what Ed Yardeni would call a rolling bear market in things like Mag 7, and of course last year in energy, but in software, etc. But I think later this year, the market is going to confront a few things. One, of course, is just your typical midterm seasonality, the uncertainty into that. The second is that there is a day of reckoning coming because the inventory of petroleum products is short and not being alleviated anytime soon. And the third is we probably have some concerns later as these IPOs come, SpaceX, OpenAI, et cetera, that there's a lockup expiration later. So I think that's a supply overhang. So I think that dynamic comes to play later this year. But in the meantime, I think investors are focusing on AI fundamentals, and there's a real shortage, and stocks that are working are the ones that are selling something that's scarce.
Tom, I want to make sure I heard you right. Are you calling for a rolling bear market in Mag 7 names? Because is that what you're looking for? You look for these stocks to become weaker at some point and dramatically so at some point this year? Is that what I heard you say?
To clarify, I think we've already had a bear market in Mag 7 and software. I think there's going to be a bear market in other stocks later this year, yes. But I think it's going to spare the Mag 7 and software. So it's going to be names that either got lofty or are going to be affected by the fact that there is a lot of supply of new stock later this year, or the companies that are going to get hit by the shortage in petroleum products. So I think there's reasons that we could have headwinds later this year.
Are you talking about like semiconductor stocks?
Yeah, semis may become a bubble. To me, they don't seem like a bubble yet. You know, when NVIDIA is trading at 19 times earnings, I think it's still a good risk reward. But I think that there are parts of that ecosystem that have become quite expensive.
If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
Joining us now, Tom Lee, CIO and Head of Research at Fundstrat. Tom, good morning. We were just saying how this market has done a very good job of kind of shaking off or looking beyond the geopolitical situation over the last 4 or 5 weeks, really following the script, as you've pointed out, of other geopolitical conflicts in the past where, markets bottom well before things are fully resolved. But how do you view things right now after this nice winning streak in the market and the reliance on Mag 7 and semiconductors to get us here?
I think the risk reward for stocks is still pretty good. I know the war remains uncertain, but I think the war has also exposed the strength of the U.S. relative global position. Earnings estimates have actually gone up as earnings seasons progressed. The U.S. is a leader on AI, and that productivity lift is meaningful. I think it's really one of the drivers for not only GDP, but one of the reasons U.S. companies have been resilient. And I know there's a lot of investors still on the sidelines. So I think the war remains uncertain, and it certainly looks like it's going to be a longer war. But I do think stocks actually still have some tailwinds as we get through May and into July.
You mentioned the earnings estimates going up, undoubtedly the case, although there again, it's been pretty concentrated in the AI theme and in semiconductors and the other CapEx beneficiaries. So therefore, the market is somewhat narrowed out to that very dominant theme. I always keep an eye on the consumer discretionary equal weighted. It's 9% below its highs, right? So that's sort of where some of the economic frictions from the war can bite. So is that okay? Is that a good formula for how this market can continue toward your targets higher?
I think one of the reasons why it does feel concentrated is the AI story, which is a global productivity story, right? AI is essentially creating productive units that actually either help workers produce more or even replace workers in some countries. It's primarily taking place in just the US and China. And so I'm not surprised in a way that we could see the US companies actually disproportionately benefiting this because it's not really taking place in Europe. So I'd sort of expect that concentration. But, as far as like the effects later this year from higher oil, I think that's a negative consequence. And I think it raises questions about what the Fed could do. And in fact, of course, we're getting a new Fed chair. That's why I think later this year, the markets could actually face a test around that. But for now, I think it's just an earnings tailwind story.
And actually, you like software, Tom. On Friday, you named it a top sector pick. Was there anything from earnings season, maybe from Microsoft's report, Atlassian? There are a number of software companies that have reported. Anything that you heard specifically that made you feel better about the sector?
Well, I think one of the things that's apparent to us around software is I know that investors are correctly thinking that they should question, the durability of these software models over time. But many of these companies are very well managed, and companies will adapt. So it's become a sort of a derating story where investors are questioning future earnings, but now I think the risk reward is pretty favorable. So I think for the right companies and for the best businesses, this is a great risk reward.
Hey, Tom, just watching the headlines that we just got, stock futures jumping on this news that we got, again, from an Iranian news agency that 2 missiles struck a ship, a U.S. ship, in the Gulf. What do you do with that? Obviously, we're still trying to react pretty quickly with this, but the futures sold off sharply on this. Dow futures down by 375 points. The S&P futures off by 40. How do you take these headlines?
I mean, I'm not surprised in the short term markets are going to react on a risk-off way. It makes a lot of sense because this adds to the fog of war. But if if we take a sort of step back further, I think we're all settling in for the idea that this is going to be a longer war. I know it's going to have some effects on oil prices, and one of the things we've been writing about to our clients is really just puzzling over the fact that there's a price for oil today in the futures markets, but it doesn't seem to reflect the reality of there's acute shortages developing, and eventually price has to react. So for now, it's been pretty remarkable to me that the market's been able to see through that, and it's one of the reasons our base case is for markets to make it to the S&P to 7,300. But I do think at some point there could be a reckoning later this year, and I think part of it is the Fed being tested, a new Fed, and the second part is, the market trying to reconcile the shortage of oil and the fact that futures prices haven't really reflected that shortage.
Yeah, I mean, I know you've been, Tom, on that idea that there might be a larger than normal, so to speak, correction at some point hitting later this year. Also interested to say you think that, some investors are still kind of off sides and underinvested after this rally we've gotten back to all-time highs, and that specifically retail investors seem as if they were kind of, wrong-footed by this move, which goes in line with what I've been watching as well. It kind of got shaken out near the lows, and the news kept them out. So where does that stand?
I think we're still, when we look at investor positioning, 2026 is unusual because in past corrections, retail investors were the steady buyers, but this year it looked like they were selling into the lows. There's still a lot of cash on the sidelines. Sentiment's still really muted. And in our conversations and surveys with clients, we could still see that cautious positioning. So I do think that today's pullback is going to eventually be bought because, again, the underlying structure of the market is a good earnings visibility story with AI. And of course, demand for AI picks up if energy prices and other pressures are causing corporate margins to be under pressure. So I think investors are going to buy this dip.
Tom, good to talk to you. Catch up with you again soon. Thank you.
If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.